Hello, welcome to this presentation where we're going to be looking at charge out rate calculators for tradies. I'm Peter Towers, founder and managing director of ESS BIZTOOLS. I hope that you're having a great day. Pressure of staying competitive. This is one of the real issues that our SME clients have because it's a very tough area out there that they're operating in. So this applies to all SMEs, this ongoing pressure to survive. They need to win work, they need to keep customers happy, and they still need to make a profit if they're going to have money available to expand their businesses in the future. But all too often pricing is built on guesswork rather than strategy. And the result is businesses quietly bleed cash. You know, this is one of the real issues relating to this whole concept of accountants providing trusted advisory services. And there's been some debate in the accountants' media articles over the last few days about this whole issue. It all started off on the 19th of August with an article, Accountants Not Seen as Strategic Partners for Small, Medium Businesses. And this was based on research that was done by Agile Market Intelligence. It's worth reading and following through and having an understanding of what the customers had to say about the services being provided by accountants servicing the SME market. Are we providing the trusted advisory service that many of us claim we are? The results of that survey would say we are not. That particular article was then followed up by an article that appeared on the 27th of August, which was written by Eddie Senator, who's a former partner of Deloitte, a former insolvency practitioner who carried out research of a range of accountants and business advisors running bookkeeping businesses. He indicated that he interviewed about 80 accountants and 20 bookkeepers for his results, and he backed up the original comments that accountants are not delivering on the trusted advisor concept. It's worth thinking about all this at this time of the year because it's nearly 3 years since the then tax commissioner, Chris Jordan, made his famous, or some people might say infamous, presentation at Xerocon 2022. Where he delivered a paper which was titled Why Tax Can't Just Happen Without You to about 3,000 accountants, bookkeepers, business advisors who were present at that particular conference. And Chris Jordan, who obviously has had a background in accountancy, he was a partner in KPMG, made some very interesting comments in his final segment of that presentation, which was headed, "You won't be designed out of the tax system as technology progresses." Some of us might query some of that. And he said, "But you must understand that if your business model is high volume, low margin, simple tax returns, your business will not be viable in 3 to 5 years." Now, bear in mind, he made those comments nearly 3 years ago. So he could have said in 2 weeks to 2 years, because 3 years is up. You should be looking to diversify to remain viable longer term. He then went on to say, focus on becoming a brilliant and trusted advisor. Focus on becoming a brilliant and trusted advisor. Who was Chris Jordan directing those comments to? I think the first series of comments were directed at accountants who are handling small taxpayers and wage earners and salary earners with their tax return preparation. That market is obviously changing. But I suspect his second comment, focus on becoming a brilliant and trusted advisor, was directed at the rest of us who advise SMEs, because the marketplace is changing and we need to understand that and ask ourselves, are we supplying a trusted advisor service? Because the results for many of the SME community at present is that they are quietly bleeding cash. And that's evidenced by the high failure rate, which the Small Business Ombudsman has indicated in his most recent report is the highest it's ever been in Australia. There are a lot of problems. And the research that's been conducted by the two writers in Accountants Daily indicate that many SMEs do not believe that as a profession we are supplying trusted advisor services. There's a good rating for taxation services, but a very poor rating for advisory. So the hidden cost of guesswork and the charge out rates is important to come to grips with, because pricing what they think their competitors charge can be a very dangerous step, because do they know how their competitors are performing? Do they know what the productivity percentage has been achieved by their competitors? Are their competitors using better equipment and therefore able to get more efficiency? Some people take last year's figure and add a percentage, but how accurate was last year's figure? Undercharging chips away at margins. It does. So there's not the spare money there to upgrade. Years ago, I had two competitors in the same business as clients. They both knew it. In fact, we had quite a number in that industry, but I just like comparing these two. One was an outstanding business, probably had about 70 tradies working for them, good vehicles, good communications, up to date with technology in every aspect, doing some very big work for big corporations, public company corporations. The other one was very small. The guy had taken over from his father and just kept on going. It was him and an apprentice and a small van. There was no two-way communication. He had to ring home to get any phone calls that any customer had phoned in during the day. And the big difference was in the charge-out rates. The charge-out rates were a very wide variation. And I used to say to the guy that was operating his business with the lowest charge-out rate, you need to adjust your prices. Oh, my customers couldn't afford it. Well, you need some new customers. Well, how am I going to get them? And I can't communicate because I haven't got a two-way radio and I haven't got a good vehicle. My car broke down last week. I said, that's because you haven't been charging enough, because you haven't got any spare money in the bank to go and buy some new gear and bring yourself up to speed. Are you up to date in your industry, or is there new technology that's occurring? Oh, I don't need that for my client base. But the problem is your client base is not generating sufficient revenue for you. And so it goes on. And I know by the same token that overcharging can alienate loyal customers. So there is a balancing check. Your clients need your input as the trusted advisor to be able to guide them on this process, just as you would be guiding them if you were working as an accountant or a chief financial officer in a larger corporation. Because those accountants and chief financial officers don't sit around just doing profit and loss accounts all day. I know, I was the chief financial officer in a public company. I had 13 accountants working for me around Australia, an extra 2 in head office working with me. And whilst we produced monthly financial accounts, we produced a whole range of other activities, a lot of key performance, business metrics analysis, what-if calculations. Could it be done better? What would be the benefit if we did it this way? Costing exercises, playing the devil's advocate, trying to forecast what was going to happen in currencies overseas, and so on. A range of issues that when you're preparing tax returns, you probably don't come across those, but your clients are potentially coming across those types of things all the time because they're out there in the real world and they need financial information, financial input, which will help them run better businesses and survive in the jungle that's out there that they're competing in. So failure to review charge out rates at least annually can cause problems. They get behind, as I've just gave you that example of two of my former clients. The result, a business that works hard struggles to generate sustainable profits. And the example I gave you, the gentleman who was not charging at the higher rates really did work hard. There was no doubt about that. He was probably putting in 60 to 70 hours a week because he couldn't afford to employ other people. He wasn't charging enough. So why charge out rates matters? I think I've basically summarised all that already, but let's look at some of the other points. It covers the true cost of running the business. And the true cost includes depreciation of equipment so that money's being provided to buy replacement, new equipment, up to date, especially in any of our tradies clients. Technology is affecting them just the same as it's affecting accountants and bookkeepers. And the margin needed to achieve growth targets. Your clients should have money so that they can undertake research and development if it's an opportunity for them, so that they can look to buying better equipment. They can look to being able to have a few days off to go and undertake some updating professional development courses in their trade or profession. So your role as the trusted advisor. I've raised some questions about it today. And next week, we are starting a series in our webinar next Wednesday, where we're going to be looking at this whole question of your role as the trusted advisor. Because the week after is the anniversary, the third anniversary of the former Tax Commissioner Chris Jordan's warning to accountants and bookkeepers at Xerocon 2022. I think it's an appropriate time to reflect. What has happened? Are we providing the range of services that are needed? Now, when Chris Jordan gave his warning, I suspect he was talking from the tax office perspective by a guy that knew a fair bit about running an accounting firm. But then we've got the other side of the story, which is how do we help our clients overcome these very poor business statistics that the Ombudsman is producing all the time? If you need or you haven't caught up to date with them, please go onto the Small Business Ombudsman's website and look at some of the details that they've calculated, where they think small business is in Australia. It's slightly improved in the last quarter, but it's well behind where it was 3 years ago. SMEs need you to assist them on commercial matters, not just taxation. And that's the big message that's coming out in the Australian accounting daily articles, the accounting daily articles. The big message, they need assistance on commercial, financial, management accounting issues. They're the key advisory services. They need to be able to trust you as their trusted advisor. You need to be able to have some conversations with them. Years ago, when I first became involved with the Financial Management Research Centre, which was originally formed at the University of New England in Armidale, I met a gentleman called Andrew Geddes, who's become a long friend and mentor. And one of the key things that Geddes was saying to accountants back in the 1984, 85 era was that we need to communicate with our clients. We need to sit down and talk with them. Andrew's example was, well, grab a bottle of good red wine and go off and talk to your clients. Sit down, get them talking, get them to tell you what's really worrying them, what they would like to know. He indicated, and I proved it time and time again, taxation was rarely talked about in those conversations. Clients would bring up all sorts of things if they knew you were listening and absorbing what they were saying. And Geddes had produced what he called a needs analysis. With his permission, we rebadged it as the SME needs analysis and made various changes, some of which Andrew's contributed over the years. And we see that as the key document that we supply to our subscribers to use, because it's a series of dot points of subject matters that you might drop into the conversation. Are you happy with your gross profit percentage? Does everyone understand the difference between markups and the gross profit percentage? Because I've found a lot of people don't understand it and they muck it up. Help them to make smarter, more strategic decisions. Those communications will help them to understand the reality. We need to be able to talk to them about the key performance indicators, the business metrics, the benchmarking comparisons. How do they line up against their competitors? So the ESS BIZTOOLS Trades Industry Charge-Out Calculator takes the guesswork out of pricing. Now, so does the professional service firm charge-out, which is very similar to the trades. But you probably understand the reasons I didn't want to use a document called the Trades Industry Charge-Out for undertaking work for professional people. So we rebadged it professional service. It's nearly the same. But then we have the setting retail price calculator, which is along the same lines, but is different because retailers aren't selling their employees' time, are they? They're selling products, packages that they've purchased from someone else. Some of them they may have manufactured it, but in the main, they're purchasing it from someone else. And they're putting a markup on it. But they need to understand the volume that they think they can sell out of the various packages with their markups. And at the end of the day, in all three examples here, trades, professionals, and retailers, we need to have identified the profit they want to earn for the year and then geared everything else to a challenge to achieve the profit at the end of the year. You need to involve your clients in this. You need to then monitor at least monthly to see how they're going. In the trades area, which we're going to examine in more detail in a moment, to make sure that the productivity percentages have been achieved, because otherwise it's a bit of a waste of time. So they need to be updated if we find that someone was calculated at 80% productivity, but for various reasons, management now accepts that's impossible. That person's productivity percentage can only be 70%. Well, it's going to change the charge-out rate calculation. It's too late to go back and change what's already occurred, but for future pricing and quoting, we've got a new rate for that particular person, or range of people. So it might be 4 or 5 people on that same level that we've overestimated their productivity. And that can be dangerous in achieving the profit target at the end of the year. We shall now go to the ESS BIZTOOLS website, where you can see the trades charge-out rate calculator in operation. We have the website on our page now, and I'm going to find the trades industry, and then I need to find the example of the rates calculator that we have prepared. So we should now be able to view the calculator. So we have the calculation of labour on cost. We have 6 of these sections, so there's 6 in each of those. So 36 is the number which we're provided for. No one's used them all up yet. So what we're trying to find out is people who have identical on-cost calculations. So in the manager, the big change there was 15% superannuation and the 5 days for training. And when those figures were all taken through, he worked full-time. He's accountable for 260 days of the year. And the calculation of labour on cost was 22.57%. There's slight differences for the foreman and office managers. They don't get quite the same, but they get a bit more than normal people's superannuation. So there's some variances there, and they end up at a cost of 21.91%. And then we got the others. We then have provision for the part-time workers and the casual workers. So we've got 3 lots of 36. I think you've got plenty of room to classify the people. We then go through to the calculation of the labour budget. And I just want to go back to the beginning. The information is transferred across from the on-cost calculator using the same reference numbers. The yellow columns are for you to complete. The non-yellow columns are automatically transferred from the on-cost calculations. So in this case, we had one manager. He's been paid $145,000 per annum, but his on-cost is 22.57%. So there's a total cost of $177,000. There's 342 hours out of the 1976 that he's not going to be directly involved. So he'll work 1634 hours, of which 30% will be able to be charged to clients. So 490 is the net amount chargeable. So the next lot are the foreman and so on. They're all transferred across in exactly the same order as they are recorded in the labour on costs, so that you can track through to make sure all that is working correctly. So we get totals for the full-time employees and their productivity. We get totals then for the part-time employees and then the casual employees. And in total, we have that there was $161,000 in labour on costs. People miss a fair amount of that at times because they don't include all of it. The total labour cost is $1.91 million. The total chargeable time is 1647 hours. So the system calculates the productivity percentage at 44.54%. The return on investment, you can do it either way. You can either just slot in a profit figure that the client would like to achieve, or you can say to him, what do you think your business is worth? In this case, I've assumed he said $450,000 and he wanted a 20% rate of return. So that's the $90,000. The budgeted overhead expenses, we've got a chart there for you to insert. We used to put the details in for that, but people had various items that they wanted to show into that. So we left it blank, but I put the total in, so our report will work for you. So we got $450,000. We then look at budgeted materials. Most tradies are buying services for their clients, whether it's paintings or it's floor coverings or it's light fittings or whatever. So we would ask the client what he expects to spend on that in the next 12 months. So this client's told us $1 million, and he claims he marks it up by 10%. So we're saying, well, that's a super profit of $100,000. What do you want to do with it? Do you want to hang on to it as a separate item, or do you want to subsidise your labour charge-out rates? He said, let's subsidise the labour charge-out rates. But he could have said, let's put 60% of it to the labour charge-out rates. So 60,000 would have gone there, and we'll keep the 40,000 in the profit and loss account as a super profit. But he's elected to put 100%. Obviously, you have that discussion with your client and make up your minds. 5% we said is an allowance for write-offs. I don't really like write-offs, but they do occur, I know. And the system then calculates the income from the sale of the labour. So we've got the total of the labour costs, including labour on costs, 1.91 million. Return on investment or profit, 90,000. The overhead expenses, 450. We've utilised the 100 grand expected bonus from the special markup, and that's a very important issue as to one of the reasons we're then doing monthly accounting and analysing all this is to make sure that that $1 million worth of external purchases is going to occur so that the 100,000 super profit will occur. Because if that figure dropped back to only spending, say, $300,000 on external purchases, being marked up by 10%, it's only $30,000, obviously, and therefore we're going to be short changing our calculations on the charge-out rates by $70,000. That's going to knock the profit around. We then got the allowances for write-down. So we got a labour target to be raised from the charge-out rates of $2.451 million. We then go through the base time calculations. These are just external calculations that get done. Everything is lined up exactly the same as what the various categories were referred to in the labour on-cost area. So the base cost is being calculated by dividing the total cost by the base cost hours, and we have a figure, and this is just part of the calculations. You really don't have to worry about this as long as you keep everything in the same order that it was shown in the on-cost calculations. We then calculate the business overhead factor. That's the total labour to be recovered, the 2.51 million, divided by the base cost chargeable hours, which we did in the previous calculation. So that figure is 2.763, and the system then goes through, it got rounded up to 2.76. The system then goes through and looks at the base cost per hour, multiplies by the trade overhead factor, and that's giving us the charge out amount for that particular person, the manager, $248.46. It's been rounded to $248. So we do have some rounding up and rounding down that occurs in the system. So we have the charge out rates, and then the system produces a proof of the overall performance. We've got sales of 1.1 million of the materials. We've got the labour, subtotal 3.5. We've got an allowance for write-off, so we're back to 3.462. We've bought materials of $1 million. We've got a labour cost of 1.9, so we've got a gross profit of 545. The GP percentage is 16%. Don't take any notice of that. I've just pulled figures into this. It's not a benchmarking exercise. And then we got the overhead expenses of 450,000. So on this exercise, we should earn a profit of 95,000. The estimate was 90,000. The variation is because of the rounding up and rounding down, the overall effects of that. So we can sit down confidently with the client and saying we set out to achieve a target of 90,000 because we've done some rounding on the rates. In fact, you should make $95,000 for the year. Are you happy with that? Now, the client might be looking at this and saying, oh, gee, some of those productivity percentages might be a bit high. You can go back and vary it and sort it out with your client then. So that's basically the way that this system operates. So if you want to know more about how all this works at ESS BIZTOOLS, you can go onto our website and have a look, and the information there, you can obtain it by going to www.essbiztools.com.au, click on packages and pricing. But if you'd like to have a one-on-one conversation with me just to look at how you're going to blend in advisory services into your accounting firm, we'll gladly host a 40-minute complimentary webinar with you and your colleagues, whereby I'll ask you some questions about your firm, the type of services you provide, about the type of team members you got, and we'll give you this overview of the products that can be supplied to you. Just send me an email, peter@essbiztools.com.au, and I will get back to you. So today we have looked at an overall summary of the challenge confronting accountants in supplying a all-round range of advisory services that meet the clear tests that SMEs are implementing. In the survey that was conducted for the Accountants Daily articles, they indicated they were not happy that accountants were supplying the value-added services for advisory services. This is your opportunity to create a great reputation for your firm in the marketplace. Have a great day. Goodbye.